All right, gang. So in this strategy course, we're going to cover the short call, aka the naked call. Now, in our last class, we actually just did the long call, but I want to actually take you guys to see what the short call looks like. Now, remember, I'm not an advocate of this strategy in particular, so I do not advocate for you guys to use this strategy. This strategy is definitely not for beginners, but we will actually use this strategy in combination with some other things to create some strategies with options in the future courses. But let me show you what it looks like as is. So the naked call strategy is a very, very dangerous strategy, okay? The reason why this strategy is very dangerous is because it has an unlimited potential of loss. That means theoretically, your max potential loss is unlimited, okay? So because it's that dire, I don't want any of my people trading this particular strategy. And in fact, people trade it and make money until they don't, and they lose a lot of money. That's why you have a lot of fund managers, they blow up accounts. People lose a lot of money using this particular strategy. So be careful because they get comfortable, and then when the unexpected happens, it wipes them out. So in this strategy here, the short call, which is the naked call, most of you probably won't have the ability to trade this call anyway. You're going to need a higher margin tier, like the tier 3 margin or tier 2, the higher tier 3 margin approval to be able to do it. So if you try to execute it, your brokerage form may not allow you to do so, which is good, okay? But let me show you guys how to put this thing on and what it looks like. So when you execute in this strategy here, remember it's a sell strategy. So we're going to sell the call versus buying. We're going to sell. And when we sell, we're selling because of the volatility is more than likely higher. And when we sell, we're going to receive a credit. Remember, buyers receive pay debits and sellers receive a credit. So we're going to receive a credit to get into this trade. And that credit, the credit itself is the maximum potential profit that you can make. So your goal is to hold on to as much as that by expiration. So when we put this particular trade on, you want to aim for around 20 to 30 deltas, okay? And the 20 to 30 deltas, to make it easy, you can see my probability out of the money option here tells you your probability that this thing is going to expire out of the money. So there's between 20 and 30 is going to have us, right around that 70 to 80%, success. Since we got a lot of activity on the Delta 23, we're going to choose there to sell. So we're going to right click. We're going to hit sell single. And when we put sell single here, we're just going to leave everything as is, one contract, and we're going to hit confirm and send. When you hit confirm and send, it's going to tell us everything we need to know about this position. It tells us 303 and 10 cents is the break even price. So that's where the stock has to trade in order for us to break even. And the max profit is $310, which is the credit that we're receiving. We can see that down here. And then the max loss, it tells you infinite. Okay. Also, it gives us our cost of the trade, including the commission, which commission is 0, but we pay 65 cents per leg. So you just basically subtract that from the 310 and you get the 309 and 35 cents. That's basically your credit that you're going to receive. So it's your maximum potential profit, basically. So let's actually go into the Analyze tab to analyze this particular setup. We're going to take away we're going to exit the buy setup, which we could just off check that. Okay. And when we look at this here, we can see our maximum potential profit. That green line is telling us down here, it's telling us 310 is the maximum profit. So this is a very, very bearish setup, right? We're expecting this stock to fall, okay? And as the stock falls, the underlying stock falls, we actually, hold on to as much of that credit as we possibly can. Now, we can't make no more than the credit that we receive. So that's 100% of the profit, okay? All right, so if you say 310, let's just say 310 divided by, let's just divide that in half, right? Divided by 2, $155. Okay, so let's say if we get $155 profit off of this thing versus the 310, that just means that we made 50% profit. So when we're talking in percentage points, that's what we're talking about. 100% is the credit that we receive. But say if we don't receive the whole, if we don't keep the whole credit and we just maybe keep 155%, that means that we kept 50% of that profit before, we close the trade out. We still made a profit. The problem with this trade here is that the maximum loss potential is unlimited. As you see, it goes off the chart here as we continue to go to the right. we can see, you know, thousands and thousands of dollars that we'll lose if this stock suddenly make a move up, you know, if, you know, anything happens positive. They sell a lot of iPhones or, you know, whatever the case may be. If this thing moves against you, you are done. Okay. So, and this is what happens a lot. Okay. Let me actually take these variables all the way down. Take us all the way down, flatten us out to 0 so we can see what's going on here. So here we go. Excuse me. So let's flatten it out to 0. So again, we got our Greeks here. That's going to give us the potentials here. And we're selling at that credit. Let's actually get as close to 0 as possible. So let's say if we got this thing, if we got into this particular trade with a credit of $2.62. So what I'm going to do is take away the other strategy. We're just going to, actually, let's just leave it where it's at. Just pay attention to the sell strategy here. The $2.62, that's the max credit here. So if we get in here, we got a 93-cent profit potential. Delta is telling us that every dollar that the stock move up, we're going to lose $21 here, plus the gamma, right? And then theta is telling us that every day that passes by, that we're going to actually, this is working in our favor. So in the sell strategies, theta is your time. Time decay helps you out. So it's $15 a day that passes by. Now Vega, as Vega move up, that hurts us also. So now we got Vega working against us. We got price working against us. If they move up, then we're toast. Okay. Let's just take a look at how theta impacts us. As time moves forward, we make money. Okay. So time is the friend of sellers, the enemy of buyers. And we can see that in this example. If we move the price up, okay, if the price moves up $1, bingo, we start losing money. Bingo, we start losing money. Okay, so as the stock moves up, we start to lose money. Okay. Also, let's say the Vega, as this moves up, we start to lose money. Move it up in 10%, so you can start to see how you're losing money here. The volatility moves against us. Okay. Let's say volatility moves in our favor and it goes negative. Let's just do some extremes, -10. And then let's say the price moves -10, it falls -10. Okay. Let's just put the maximum profit if the price drops, the price drops $15. Let's actually just say $20. This stock drops $20, I'm at $259 profit. The volatility drops 10%. You know, you can see I'm at 99% profit here, basically. And that's the max that I can actually make off of this thing. So again, the reward and the risk is the thing that you want to pay attention to here. The risk outweighs the reward in most cases, so we try to stay away from this particular strategy. Okay, it is we don't want anybody blowing up an account, and this happens in real life, meaning that you lose all your money plus some. Okay, this does require margin to you for you to get into these particular strategies here, and so again, we stay away from these here until you get more advanced, and then you can play around with fire if you like. But me myself, I don't even play around with that. So I do not advocate for it, but I want you to see how it works because we're going to use this particular strategy once we start to combine options to create strategies. Okay, so this is the naked call strategy. I'll see you guys in the next strategy class. Peace.